This is London. Hope you guys are doing well today. Bitcoin spike here. We will talk about the action going on right now, the current price of Bitcoin. We'll discuss it in terms of the technicals, of course. Shout out to the VIP. We're going to discuss also Doge, FXS, Ape, Luna. We'll discuss, guys, quite a few coins, depending upon what you guys are trading, what the VIP are looking at. GMT, a lot of the price action is down. Without a doubt, guys, some downward price action, trying to hold on to the 50% retracement. You guys know on the macro it's been quite a battle, guys, so far. The last 24 hours has been quite a battle. I want to shout out to the VIP. I know you guys are trading. Hopefully last night's stream was a little bit inspiring. Some great technicals there, and want to shout out to the VIP and to Jubal in the back. Jubal, brother, love the technical work. We're having a blast back there, aren't we? In terms of this pickup, 50%. Bam, move to the upside overall entirety, 69,000. The 50% return, bam, we're right there, guys. We're right on that 50% of a discount, bam, of the all-time high. Next key level, there are a few in between that we have demarcated, but the next key level, guys, would be that golden pocket. We'd be very excited about hitting that 60% discount, about that 60% discount. So we'll dig into the lower time frames right now. Let's get into the price action. And we're about at a level of support. Very interesting, although it's a very difficult level of support. The 30-minute is a very good level of support. Now, we discussed this specific price action, all right, or this specific, this specific pattern, guys. You know, buy at support, sell at resistance, trade your patterns, and hit your targets. In terms of this specific line of support, okay, on the 30-minute, you guys understand what a fan is, okay? You understand the requirements, okay, in terms of its operation. Well, I went through a very quick video earlier today, and it did reverse, very interesting reversal here. It faked out the market here at this specific move. I'll leave the fan for you guys to read in Murphy, okay, in John J. Murphy, in terms of New York Institute of Finance, in terms of the operation of it. We're just at that level of support right now. I'll state that. We may have, this is a very interesting pattern here, guys. That reminds me of a specific pattern that we have seen in the past in terms of the operation of it. Right now, we can go back to the technicals on the 5-minute. Let's go to the 5-minute. And we'd like to dig in, guys. If we can find a few trades, right, we're all game. If we can get together once a day and say, hey, and we're a lot, guys, in terms of the trades, etc. Just have to shout out to VIP on the back. You guys are doing awesome. Just look at these older levels. Sean, you're kicking it. Nice to see that interaction. And Jubal, like to see that. Just awesome stuff in the back. You guys are rocking and rolling. It's a good group, guys. In terms of BTC, currently down 0.7%. Feels like we're in familiar territory. We're pulling away from the specific. And shout out to Jubal. I have to say, Jubal, I believe you called this in the back. You're saying this just looks like it's about ready to roll down. Okay, so yeah, you're feeling short. Nice call. Jubal killing it in the back just perfectly. I think it's this pattern. I'll look back into it, but I feel like it was this pattern. Had a bit of an ascension here, a little bit of an ascending wedge going on right here. As you guys look at the bearish nature of what just happened, man, that bearish nature, right? And it didn't make it far into it at all, right? That ascending line of resistance, ascending line of support, right? The constriction between the ascending line of resistance and support, right? So if you guys are in a short, you're making money. Congratulations to anybody who's in a short right now, right? Congratulations. If you guys have traded multiple times, congratulations, guys. We'd love to see people trading. That's the bottom line with Bitcoin. It's all about the trading. If you've been stopped out from your 50% entry, well, I don't know, guys. If you're on leverage, I would imagine you have been. If you're on spot, I would not imagine that you have been necessarily yet, guys. Looking at this is about a 2% differential, about $775 off of the 50% retracement. So it's not a huge move to the downside. You're looking at $700 or so dollars, $700 or $800 just off of that 50% retracement. So if you're on spot, if you're looking for an acquisition at that 50%, as opposed to if you are, I'd say if you are, if you are involved at a, on a degree of leverage, then at the leverage, point of leverage, then I could imagine you could have been stopped out. Looking at this specific line of support, will this specific line of support hold? It's in, I say that's in play as well. We have a top line, I'd say level of resistance here with an attempt to actually go up as a an extended bull flag, not the framework that we'd like to see a bull flag in. If this is the best that the bulls can put together in terms of a bullish formation, it's going to be rough, guys, because that's a difficult looking bull flag. Guys, if you would look at this in terms of that top side poured down here, bam, yes, but these can get a little dangerous in terms of a bull flag that looks that bad, that has failed to the downside. We've seen some of them become aggressive in the past, just to let you know, not to scare you from the market. Again, if you're in a short, congratulations. If you're in a short, you have a decision to make. Very easily stated. I think you guys know in terms of that, my what I would say to you guys typically is you have a decision to make. That just means, are you guys going to take profit? If you're in a short, are you going to take profit? Very easily stated. And it's just been a nice range as of today. If you picked up a long earlier in this level, you made up to 70, 80%, etc. If you picked up a short in this level, you're triple digits right now, depending upon how you've chosen to trade that. And yeah, wow, that's a nice return there, I have to say. That's a nice short I've got. Currently in the money, 170%, 170% on a short. That's nice. In terms of an opportunity for a long position, I would look at the 70. Let's say that 170% is kind of an extreme. I would just say that any of the returns that I tell you about or show you, I'm just going to say consider them extreme examples. How about that, guys? So that you don't try and emulate them. But this level of support here, I don't want anyone getting off of the, going out of bounds. Just you guys, I want you to focus on your trading, right? And however that manifests itself. Although I got to say, you guys in the back have been booking triple-digit trades or near triple-digit trades. So yeah, maybe you guys should put the qualifier on your trades, because they've been some of them have been really fantastic. Look at the level of support here. We see the failed bull flag move to the upside, downward sloping channel, right? We see this feature in here. And again, what do we have in here, guys, if you're looking at this? Just to recover, guys, or just to review. This is a level of support that I want to say has been respected in this zone because of the preceding level, or I'd say this preceding level of support here drawn down through this area. Becomes very interesting for the current, I'd say the current hit that that's trying to manifest itself. Now, that gives a framework to where the buyers may be a bit more inclined to respect it. And what I'll say, guys, if you are unleveraged, just remember never to be overexposed at any higher price. You guys are in any specific trade. It can be an exciting mechanism to deploy. And to the extent that you guys are fully aware of those issues, I congratulate you. I salute you. Okay, so to the extent that leverage is new to you, just baby steps into it, I would say, would be the really what the doctor ordered, right? In terms of this level of support, looking for it would be nice to hit on the lines on the candle wicks. We have a bit of variety. Okay, and always check your wicks. I say 2022, check your wicks. We're off that level. Off the level of support just a touch, and to the extent that buyers have decided to come into the market, we would be excited to see such to maintain relevance of the 50% retracement, again, on that 4-hourly, on the daily, etc. And nice stream last night, guys. We went through some solid technicals, and Jubal, it was nice to review that. Thank you for your comments on the on the stream. I have to say that. Thank you for your comments. I want to just say shout out to Jubal. You're doing a great job at VIP, brother. We love having you in VIP, without a doubt. Jubal in Alaska. Want to say, yo, Sean, what's up? Sean, the man, yo, in Florida. We just have a great team, and we're excited to see kind of what can happen in 2022. Should be an exciting year. So we're just a touch north of this line of official support. Ugly pour down from this specific. And guys, in terms of this bull flag, you guys know the classic definition of the bull flag that we'd like to see. The classic definition of a bull flag: move to the upside, downward sloping channel within its own parameters here, right? Within specified parameters. Not such a deep gulch down in through this zone, right? Not a move to the upside in a channel that nearly eclipses the entirety of the move to the upside. That's not what that's not a good I'd say formation technical formation that is beyond expectations, guys. That's not it's outside of the norm. It's not desirable by bulls. So to the extent that this is still classified as a move to the upside, downward sloping channel, the basic requirements are met that we need a channel that cuts against the framework of this move to the upside. Real simple. We need to move up, channel down. But it needs to be a move up and a channel down, something with some structure. And the more that you see a bull flag, the more that I think that you'll be inclined to recognize this within the classic framework of the expectations. The more they start to push, right? The more that these channels like to push, the less desirable they become. Okay, when you start to eclipse the entirety of the move to the upside with the channel framework, it's not what we're, hey guys, it's not optimal. It's not ideal. So seeing a very kind of lackluster, I would say, in terms of this specific bull flag here in this zone, as opposed to that ideal. So always make sure that your patterns, when I say trade your patterns, we discussed this yesterday. If you spent 6 months looking at your patterns, right, and saying, you give yourself 6 months to find the perfect pattern that you wanted to trade, this is a great example. We went over that last night. And in terms of the perfect pattern, right, you would want the perfect pattern conformance, right? You may have your type of pattern, and then you would have it whether or not it conformed to the requirements of technical analysis, okay, to the fundamentals of technical analysis, right? This does not. So looking at the framework here, we have one more interesting component here to discuss. I want to go over this because we've been covering it in the back frequently. Guys, in terms of, I know that you guys already see this, but in terms of the curvature here, this feature, in terms of just what can Bitcoin do to really frustrate the traders, she can unleash this type of behavior. Okay, and in terms of the curvatures that you start seeing in BTC, I always remind you guys in the back, etc. I'm like, guys, pay attention to the curvature. Without a doubt, when you see it, just be aware, guys. Be aware of that curvature feature, and you're seeing that here. Really, the curvature is also it's close. It wants to include this portion in here as well, though I don't think that it necessarily does. But you'll just see this as a warning signal, and not that it can't surprise to the upside. Okay, not that it can't that you can't have some nice moves to the upside still, but typically these are difficult for traders to trade. Right, price actually becomes a little bit aggressive. Looking at this framework here. All right, looking at the framework here, you'll see an internal curvature as well. We went through that last night, and just very interesting with this level here. I'll discuss this very, very briefly. Let's look at this. Let me pull up one thing on my side screen. Give me 2 seconds, and let's see what we got. Let me just pull this up real quickly. Boom, there we go. Got that done. In terms of the framework here, and these are the types of questions that traders start to ask when we see curvatures. We start to ask, well, if I have a curvature like this, right, in this zone, and this is, guys, this is the fundamental problem with curves, right? If I have a curvature like this, right, with a level of curved, an ellipse, right, in terms of the support and the resistance, well, is this counting as this looks like it counts as a nice descending wedge, doesn't it? Right? This is how things start to work. Traders start to bend the rules a little bit. Classic descending wedge would be a level of resistance, level of support that's constricting, right, with a downward sloping apex, right? To the extent that we have a question that surfaces such as this, a level of resistance and a level of support in a curved fashion, these are the types of questions and ways that the technicals start to be kind of amended. We'll have really nice technical features, and I'd say, just technical requirements that are fundamental in TA, in the market, etc., in our trading, and they'll start to get amended. We'll start to say, well, this is a type of, in terms of inventive TA, we just don't want inventive TA, guys. And these are difficult scenarios to justify trading. I'll just tell you that. And in terms of that classic feature that you're looking for, in terms of the types of patterns that you want to trade, these are difficult, guys. And it's when you notice them, pay attention to them, please. I'll just say that. So testing a level of support right now. I booked a short. I did. triple digits, and I'm sure that you guys are shorting. Jubal, I'm sure you're shorting, and I got to say that Sean, I know you're shorting, without a doubt. And just shout out to the VIP. There's Jubal. 1,000 BTC at 33.80 vaporized. Boom. Nice. Thank you for the heads up on that. That's a big deal. Yeah, very, very nice. I appreciate that very much, Jubal. Looking like, and that was it. Great info. 33.80. 33.80. Boom. Yeah, they just got wiped, didn't they? And that's right at that's close, isn't it? That's just right above that level of support that I have demarcated here. Very interesting level. Very, very interesting level. And yeah, I wasn't the only one who saw it, huh? So short. Boom. Yeah, absolutely. And that's awesome, Jubal. Thanks for the for info. Boom. Information. Bam. That is awesome. And Jubal is VIP. Bam. And vaporized, absolutely vaporized. Looking like this could get a little bit. And you guys know yesterday when I said it, could get a little aggressive to the downside. I was the one who was jumping in on the longs. You guys know that. So some of those worked out really well. Last night they worked out well, and today had a few features that have worked out well. So anyone who booked a short at this level of support, I understand where you're coming from. Do you have any exposure to the downside? Do you want the exposure? Go to your candle wicks. Look at where we're at. We've just hit on the actual candle wick, guys. On the actual wick, we've hit. Very important. That's an important moment for the market. Without a doubt, that's an important moment for the market. This is a key test at this level. Without a doubt, really key test at this level. Just perfectly scripted into. I'm going to say perfectly scripted into this level of just the candle wicks. I like this action. I like the level of specificity the market is providing. Boom. This is nice, guys. This is good trading. Let's take a look at. We want to go back to the actual. I'd like to go back to the actual lines, but this is actually really nice. You see some cleanup on this curvature, just to kind of provide some commentary in the meantime. BTC 33,460. Right, decent price. Let's look at the how red is the day. BTC dominance up a touch off 1.76. We have become accustomed to Bitcoin. Okay, in terms of these just saber rattling almost, right, to the extent that it is dropping, price is dropping to an indicated level. It's going to be tough to find a level that we haven't indicated. You guys know whether or not we're doing it on the cell phone or whether or not we're doing it on the desktop here. I would say makes a difference as we would look at this pour down feature here. Bam, you see the 61, that's 61.8 we had, right? That's 65 right there, 65th percent. That's on an extension, but that one, bam, that we just hit right now that we're on, we have. And it's just you're going to find I'd say a variety of actually, truth be known, I'm not sure that you will find a real solid variety of and this is going to be a discussion, guys. We'll have to have it, okay? In terms, I don't know how to necessarily approach it, but in terms of using extensions between the 50 and the 61, 61.8 to the 65th, okay? There are some very boilerplate approaches that we could take. As I look on the 30-minute, looks like we've come into contact with that oversold portion, okay? That would be that in terms of your targeting. I wouldn't recommend that you just necessarily look at your targeting when we were to reach a threshold on an indicator such as RSI. It's time to buy, right? RSI is at 30. It's oversold. It's time to buy. You'll just see that become. I'd say it's quite deficient in this area. RSI oversold. Buying into that, okay? You've really got to be willing to compound down into that, guys. If you do it, you got to double, triple down, cover your specific entry with additional entries. Pardon. Same thing here. The indicator does not work as a nice entry, at least on the 30-minute. Here, it worked as a nice entry, but now you're one for the last three. To the extent that this would work, we start to look at. I say your extensions, guys. I think you guys know in the back. It's not orthodox. It's a non-orthodox approach in terms of extending your, I say deploying your extensions to the downside. And I think you understand why and how it works, though. You guys are a developed, I'd say, a technical group. You guys understand deploying your extensions to the downside. It's providing you the same information in a different context, right? In terms of your Fibonacci's in the context of the preceding move, and we can go through some parameters here on that discussion. We'll go through that discussion. If you guys would like to do that now, I really wanted. Let me tell you, I'm kind of avoiding that discussion because I wanted it to be kind of a light stream. I tell you guys, it's like Sunday night. I'm like, let's chill and have kind of a light stream. So us going over, first of all, with some downward price action, that may not be possible. It may not be just okay. Let's just have a lighthearted, no problem kind of stream. If you guys are stressed out about your trades, I prefer you not to trade. Guys, if you're stressed out about your trades, I prefer you not to trade, just so that you know. This level of support is going to be key, just in terms of the technical information that needs to be immediately communicated. This level of support, boom, boom. Okay, we've hit that twice. To the extent that that's been breached, I'll say this was a fake out earlier today. Okay, we did go beyond that level of support, and bam, we trajected back up. So the market is looking at a potential here that a level of support has been, I'd say, breached. But we just within the last several hours here, last 12 to 18 hours earlier today, we did really fake out in this zone. And I wasn't upset about that at all. So just so you guys know, if I could make a video, honestly, if I could make a video, I traded this to the upside, guys. If I could make a video on YouTube, he's like, oh, London just made a video. It didn't work out that way. If I could make one like that every time, I would. Just so that you know, I shot a video earlier today. I'm like, this is urgent. Will Bitcoin go down through this area and boom, move to the downside? If I could do that and somehow, I still traded this to the upside. I entered a long right here, okay, bam, to the upside. I assume all you did as well. But it's like sometimes if I could navigate or push the price action in a specific way, I definitely would, guys. I really would. Now, I don't do that. For the record, I don't do that. She doesn't like, Bitcoin likes you to kind of keep the right answer on the sly. If you guys know that, if you've noticed that, she kind of likes it like, well, right over in here and over here. She likes, it's just interesting to me. And it's like BTC likes the answer kind of on the sly a little bit. She'll surprise the mainstream. She wants to surprise or to deject the mainstream. I'm always ready to trade against the I'd say trade a fake out, and that's the bottom line. Very important today as you look at that preceding video and the notion that such a well-established pattern could still fake out. Absolutely, guys, could still fake out. So always be prepared for that. And the key feature of this fan framework, has it been breached here? It's just, guys, we have to pay attention to it because it's so obvious on the screen. It is so obvious. It's like we've seen some additional price action to this extent. I'm going to leave this for just a few seconds, go back over to this zone, because if you guys will recall the framework of, as you know that we were etching up in this zone precedingly around March, okay? Around, this was 10th of March on up and through. And guys, what was explaining the moves that BTC was making? Just very, very solidly going from, and on the different time frame, what was the hourly, 4 hourly, etc., you'll just see a very nice level of preceding. This is just the fan framework of what BTC likes to do at times. This top level, if you guys remember, I think that we had to draw up and we hit down on to the wick, right, on the candle wicks, boom, in that zone. But seeing the framework of a resistance, boom, flip to support. And the resistance, boom, resistance, right, flip to, bam, support. Then the resistance, essentially we're talking about the resistance being this line and this line. That being a line of resistance, boom, being flipped, boom, into support, move to the upside, then we're on the candle wick features from there on out. It's just when you feel like we're etching up along something, there are still lines of resistance and support that are being accomplished, okay? And BTC has been doing plenty of those. So to the extent that we have the same dynamic here, we can't ignore it. And I don't want to be on the record as having ignored it or not having caught it altogether, right? So in the framework here, it did have a level of ultimate, I'd say of ultimate utility, where its utility was maximized. So that'll be the issue here is, will we reach a level where I say the fan is no longer relevant. It's gone. It's kind of expired. Its utility has gone too far, right? Or it's been maximized by the market thus far. Because at some point, at some point the same equation, the same roll of the dice will not function any longer in the market, right? There will be a maximum to which the buyers and sellers are able to continue normally. Any pattern framework in the market, please tuck that in your toolkit. Okay, so looking at the framework of the RSI in the back as support, we could check out the maybe the MACD. Let's take a look at that. Let's see what we've got in terms of MACD. I may have it in the background already. Just to take a quick look. You guys know we're heavy on patterns, right? We just are. Let's see MACD, see what we've got here on multiple time frames. Seems fine. Let's take a look at what we have. MACD is so easy to controvert on a different time frame. It's just difficult, guys. We're pouring down on 30 minutes. Let's look at the daily in terms of MACD. And, I mean, you know, this was a situation here where just to look at the MACD, let me look at the circumstance here. We were heading back up into positive territory, looking for some sort of a move to the upside, and boom, just straight back down. So it's a circumstance where it's reliable as long as it looks very repeatable, and until it's not. It's just, you know, we're within a threshold here of assuming positive action, and then no, we get negative. It's just the MACD. There's just a reason I don't focus on it too frequently. The divergences on MACD, divergences can be very difficult to deal with. I think you guys know that. Look at this on the 4-hourly. Look at how you guys understand the discussion we have on RSI frequently. It's worth having right now. As we would look at RSI as a continuation momentum indicator, you just see BTC has used this in terms of achieving oversold. Buyers do what? They continue to sell. Bam, bam, continuing, hit it oversold. Buyers continue to sell. Another hit it oversold. Buyers continuing to sell. Selling. It's just that is the dynamic that we like to that I like to highlight, because that is the essence of RSI, Relative Strength Index. It's a continuation momentum indicator. So, have I abandoned my upside target? No, not at all. Will I abandon my upside target? Well, I will. The further that we get away from the upside target, just so that you know, I look at more solid entries to instead of more micro entries to play to another potential micro move that may be indicated. I start to look at more macro, solid macro entries. And this is just always going to be here for me, period. Just for me, guys. To the extent that it's a stranded target. If it's a stranded target, that's fine. We have some lower side targets right now that even in the summer of 2021 we weren't able to achieve. Okay, I'll tell you, and you guys know, this is going to be a long-term, and right now, guys, the market is definitely looking at this. I just know this for a fact, guys. The market is looking at this specific target in this zone, this specific area, because of the interaction of the wedges and the way that they've been trading, etc. The 14,350, this level right here, I guarantee you, is being looked at by the market. Now, it got left alone. I mean, it got abandoned, right, in terms of the feature framework of any price action up and above. Now, I'm not saying we are going there, but it remains a target. It remains a target. It's not one that you would have wanted to play too heavily, right? Especially when it became obvious, like we're just not getting past the 50. We spent, how long was it, guys? 2021. 3 months on this specific level, on that 50% retracement then. So to the extent that it's still, I just guarantee you guys, I promise you, the market's looking at this right now. They're just looking at this. The further we can get away from a target, the more potentially irrelevant it becomes. I will say that, but it's still because you wind up with different patterns and different expectations in, I'd say, the immediate time frames that you're dealing with, right? So it's not like we would expect just at any point in time a complete reversal of the entire process right now, because at any point in time up and above. It's just, but it's still a target, guys. The any incomplete, I'd say the framework of any failed. I would say this is a failed ascending wedge. Okay, to the extent that it went bullish, we would expect them to be bearish. We've traded 50 of these. You guys know about 50 of them. I'd say 50 to 100 maybe in the last few weeks. So to the extent that fits in the framework, yeah, that would be a target. We would expect that at some point to come down to that level. I'm just going to be on the record as having said that, period. And if you haven't been trading, if you've been trading, you agree 100%. If you haven't been trading, you think like, this guy's crazy. This guy's absolutely lost his mind. 14,000, you bet, guys, you bet. You bet it. 14,350, without a doubt. It's a target. it's going to be a target. Now, that's a downside target. I'm going to tell you, that's for me to fashion a target lower than that, it's going to be tough, guys. It's going to be tough. 14,000. I could look into it if you guys want to fashion a target lower than that. It's just, I mean, it's so funny, isn't it, guys? Because we have targets to the upside. It's like we'll talk about $100,000, and that's reasonable in the context of some of the formations we have at these higher levels here. It's like, well, that fits within the framework of the technicals, right? $100,000, no problem. Some people 150, some people 250, some people, you get up there and it still gets justified, right? Stock to flow, etc. It just does. It gets justified. But you bring up a target like 14,350, and everybody wants to paint you purple and put you or green and put you on the street corner. It's like, I mean, it's just a target, right? It's going to be as you look at your classic Fibonacci's, right? Is your 86 right now? Is that your 86 would be 9,660? That's a Fibonacci target. Period, right? It's like if it comes out of a Fibonacci, that's different, right? If it coincides, right? If the 786 coincides with that level, no. Well, okay, now it's justified. That's almost a coincidence with a coincident factor with the 786. Okay, we'll listen to it with 786. Okay, but the likelihood of hitting the 786, right? It would be very low until you spent enough time at the 65th of the golden pockets where like, well, we'll begin to consider it, right? But it's interesting. So that would be about equivalent with the 786. Long story short, it would be an amazing level to hit. Let's get back to the details on the technicals. Let's go to this. Let's go to the 5 minute. Let's see where we're at. You guys in trades, you long, you're short. If you short your money, you made money. I booked 100 and I booked a triple digit. I'm sure you guys are in the money right now. In terms of the pour down feature here, just the momentum continuing. And man, those order books, those order books getting hammered, huh? Absolutely just laid to waste, huh? Boy, huh? I love that program until it doesn't work. You're like, dang, it just happens. It is what it is. Till we breach this level of support here, let's see what we got. And I just don't want anyone to go too heavily based on any like specific program. Make sure your TA is what's guiding you. That's a nice hit. Yeah? Nice hit in that area. That's a nice level of retest on this specific level of support, guys. That's not bad. I'm excited about that level of retest. This is kind of framework of etching into that level of support. Looks like there are orders all up and around this area. Let's go into the 1 minute. Very interesting. Yeah, I'm interested in this. I like this. This is well done. Now, in terms of the price action, we'll dig into it. I wanted to go macro. I really wanted to have a chill stream today. I'm like, yeah, just kind of chill out, relax. It's Sunday. Hammered, agreed, no silver bullet. Yeah, I mean, it's just it's so nice to visualize it, huh? And the ag audio indicator, man, that is so cool. That is just the coolest thing in the world, huh? Just awesome, huh? It's just awesome. I can't wait to see what all you want to do with it. It's going to be cool, brother. But yeah, and I love when the trades work out on the order levels. Without a doubt, this is that level of support that we're currently at. It's like we're just channeling into the possibility for a I don't know, guys, a little bit of a tough level. If you guys are booking shorts, if you're booking shorts, right? Difference between being short and booking your shorts. But, at some point, some people may be short for a while here, right, on BTC. It just may be the way that, there we go. That's a short there, right, in terms of that. Let's take a look at, what do we have here? Not too big of a move. Not too big of a move, but definitely technically breaching that level of, let's see, that level of support there. She wants to recover. We did this yesterday. That was a perfect pickup for us yesterday. It just was. So to the extent that we're below this level of support now in the context of that band, etc., she's done this one time in the last 12 to 16 hours, right? Looks like people are playing that. You see that just nice price action to the upside. A lot of traders trying to hammer potentially both directions. I'll tell you that. Like what you cover, what you're short, what you're long. Where it's a difficult spot. You got to have your stop losses, guys. Bottom line, you got to have your stop losses, and we'll continue to see how this channel here continues to work out. And thanks for putting that. It's nice you put that information in the VIP chat. Very nice to see that in terms of Jubal. that information. Like, yeah, you got to have a cover. People who jumped on board there. Anybody booked that short? Boom, guys, did you book that short? That was a nice short to book, wasn't it? Pushing down like that. Boom, nice short to book. Very nicely done, guys. Nice long to pick up, without a doubt. Man, that was a sweet book of a short, guys. If anyone booked a short. Now, the nice entries for shorts were where, guys? Up in this zone, right? We know that, okay? Just in terms of the overall entirety, kind of the range of the day, I'd be surprised if anyone who's trading now that didn't trade earlier today with this feature here, if you're not drawing some really strong similarities. We pushed earlier today in this zone. We just did. We were down and out, and then had a nice recovery back up to the upside. This just feels familiar right now. If we could develop some sort of a framework for how BTC is doing, right, or how she's treating the traders, like if we have a little bit of a lag in the market, or there's a little bit of a residual push down and through, a little bit of a laziness to it on these levels of support that we can get used to, that would be nice. It just, yeah, that'd be interesting, to the extent that we could have some expectation of, well, BTC's been pushing every line of support and then recovering. Something along the lines of that would be nice to know, right? So let's see if we can get the recovery in, to the extent that we're clearly technically operating right now. No, guys, this is not clear. This is one reason why we don't prefer these curvatures, right? To the extent that we have a curvature and we have an expanding diagonal, we get into some Elliott wave theory, and those become difficult, I would just say, because they don't always operate the way that it's not always a plus B equals C equation. It's just not. It's not the framework that we always that we would, if we talked about for 6 months, we're going to find the pattern we want to trade. These would not typically be that pattern. I'll just tell you, they typically would not be that pattern. Let's look at you would probably choose ascending triangle. You'd probably choose something like a let's see, ascending triangle, or a bull flag, or a wedge, to trade around a wedge, something along those lines. So looking at the framework here, yeah, we have some Elliott wave implications here. It's just we've pushed this line of I'm just going to call it from the bottom line of the fan. We've pushed it once here with a fake out in this zone, and it's just the market is very cognizant of that. In addition, below that level of support on the bottom here, we would like a return to that prior level of support, boom, to turn into resistance at some point. So it's a dicey. We're in kind of a dicey situation with BTC. I won't lie. And to the extent that you guys are trading, congratulations. You guys are doing well. When the price action gets going downward, guys, it's difficult to not book a short, right? When we're just screaming to the upside, it's difficult not to book a long. So let's see what we got here. Got a market profit. Let me see what I've got here on my. Just want to check in on my own screen, just to kind of chill with that a bit. And let me see what I have. I want to make sure. There we go. All right, let's dig back into the lower time frames and take a look at where she is at. Just when I'll say, Angel and I have had this discussion frequently in terms of like Elliott wave, etc. Like, what are your real thoughts and opinions on Elliott wave? It's just, to the extent that they could be consistent, we just like consistency. We really do. But we don't even find in the market really there's variation between levels of support and resistance, right? There just are, right? We don't even have those aren't always respected by the market. So sometimes the expectations may be a little bit off if we would look at the real. I say there's real dynamics of Elliott wave, or really anything. We're going to get some variation. Although I think you guys will agree that the framework of like a bull flag, everybody just likes bull flags. We like bull markets. We like things that go up, or that's how we're geared. I don't know that Sean falls in that category. Sean I think he's a bear by birth. I'm not sure, but he definitely is, guys. He loves to short. He's like, what is Sean doing in the back? He's shorting. I guarantee you guys, he's just awesome like that. He's always prepared. He's geared to short, without a doubt. It is full time. He's just he enjoys that, so we enjoy accommodating that environment for him. He's awesome VIP in the back. Let's see what we got. Really lackluster formation here, right? Yeah, really odd looking, isn't it? That's not even. That's not even. This is the part that the traders start to not like, guys. When you get formations that look like this, it's just that's buyers and sellers, huh? Sure, sure. That's buyers and sellers, right? What I start to see here is even within the framework here. This is where you need to start paying attention, guys. Please pay attention. Watch this. In terms of this level here, do you see what makes you uncomfortable about it? Really, is you would look at it. Now, again, it let it fly to the upside if it chooses. It can surprise. But looking at the framework, do you see the curvature on this? Right? Do you see what looks a little uncomfortable here? This curvature here is just it is what it is. It just, and when you start to notice that in the price action, there's a reason I notice it, because it becomes difficult to trade. Right, and it's to the extent it's an indicated fan on some level, or some sort of other program tactic by, or let's say a program deployed to mitigate. We might say to mitigate. We went over this last night a little bit. Last night we went over it to like mitigate some of the negative pricing of a lot of people just scaled into and decided to sell. Right. Well, maybe there's a save technique that goes in, and a kind of a market mechanism that goes in to maybe shield the overall price. Okay, so something along those lines, and that's conjecture. I'll say that's conjecture for the record, but it makes a lot of sense to me that something like that needs to exist. We had some exchange employees, an exchange employee previously. I think he was with Voyager. Nice kid, and he traded. He was a decent trader. He was VIP for a while, and he I'd say that he might know the answer to something like that, but I'd say even someone with the actual technical exchange that he was with the Voyager exchange. We looked at that exchange for a while. Not too bad of an exchange, I'll say that. But to the extent that those mechanisms exist to slow price in the event of a really downward price movement, we know that that exists on many levels, with CZ halting, withdrawals, etc. I mean, we're very aware that the exchanges deploy what needs to be deployed in times of crisis, right? So we'd like to see a bull flag move to the upside. We'd like to see a 1-2. Really don't have that classic 3, 4, 5. You know, we just don't have that classic feature here. Solid line of support can be fashioned. Let's go to the 5 second, see if we can find something a little better. Level of support, level of resistance, a little bit better. All right, a little bit better. Just odd patterning, guys. It feels again, it doesn't feel real natural. To the extent that we have the formation of a bull flag, it's a bull flag in with its basic requirements, being level of support, level of resistance, downward sloping channel. We just went through a little bit of a variation in this zone. We'll stick off the 1 second. We'll go to the 5 second. Looks like a decent attempt to recover here. Not bad. However, it has been fashioned. Definite. Let's see this in terms of. Now I just want to know what you guys are trading. What are you guys trading? Jubal, did it knock through the floor on you? Let me know. Did the floor knock through? Hit your stop. Let me see this, Jubal. I want to know your stop. Did the floor cave in? Caving in. Let me put this. Caving in. Hit your stop above. And let's see that. I'd like to know. So look at maybe a little bit of a reversal feature overall that can be scoped out in this zone. The flag is playing, however, it has been decided to be fashioned in terms of its with its technical deficits. Not a real clean environment to trade. If you guys are just buying low, all right, in terms of the rebound, if you're buying, on these drops, you're doing pretty well. But not all the moves on the drops are really producing a significant profit. Okay, you'll get into, if you're on some leverage, you can hit into 40-50% pretty easily on these drops. You guys know, with a little bit of a rebound, you'll hit into 20-30 on your on that max leverage of 125%, etc. 50-60% on these moves. When you're looking at these are nice opportunities to trade. So if you're trading Bitcoin and hitting these drops, you're doing decently. I'll just tell you guys that. And shout out to you guys who are trading. Very exciting. It's not necessarily an intuitive process in terms of the application of a fan. You guys know that. I don't want to get too technical today, but this is a very clearly indicated level of resistance to support. Boom. Level of resistance here to support, and then we'd have that level of resistance, boom, to support. So that's a classic reversal feature. I have to talk about it because it's technically indicated. That's the bottom line. If you would look at these, you know, in the New York Institute of Finance materials, you'll see the exact same picture. You guys know that. I may have it. That's a different picture. You guys, you have it on call. I've got another tab around here to show it to you, but you guys have it. You have the book. So that is what it is. It's a classic institutional reversal feature. So looking at the market, trying to pick up again, would be interested to know if you guys had any type of experience with hedging. How did hedging work out? Did you make the right call in terms of capital assessment if you got involved in it? Did you appreciate or like the exposure to the upside and the downside? I'd like to know what you guys thought about any hedges that you decided to deploy. It becomes interesting on that question of capital exposure if you have a long and a short at the same time, right? You know, you can enter a position on the similar or exact leverage, right? And you can have more cash in the on the side of the I'd say on the side of the more probable event, right? To the extent the probabilities play out, you're in the money. So that's and it requires some calculatives, entries, exits, and liquidations need to be figured in. So it's a little bit of an advanced discussion, not the typical Sunday night chilling with the VIP kind of discussion that we need to get into, but I am excited to hear what you guys have to think about that type of a framework. So looking at a reversal here, and let's take a look at the market right now. Quite red, 1.3% down, 33,590. Psychologically, you know, we've just been at this level before, and it's worked out very well. You guys know that psychologically we've been here, and it's worked out very well, 35%. We remember this because we hit these targets. We just did. If you've engaged in stop loss, if you're at a stop loss and you did enter, just always remember stop losses. Boom. You guys know that. Catching that reversal pattern was a key feature, I thought, in terms of it makes the pickup a little bit more dangerous. I'm going to definitely state that it makes that pickup a little bit more dangerous than stop loss. Okay, on the 4 hourly, kind of an interesting time frame to look at in terms of a failed bullish pattern. Let's just call this a failed bullish pattern in terms of this descending wedge. Okay, the descending wedge. Now, what this would mean is that this on the 4 hourly for us will be a upside target, period. It's going to be an upside target for me, period. Now, if the market demonstrates a failure, complete failure to recapture any of its upside targets, then we'll note such. Deploy your stop losses if you guys are long or short. Okay, just never overexposed any specific trade, and I'll just let you know that we're not going to back off of our trade game. That's just not it, because a target doesn't get reached. Like we have, what was it today? We had one in the back that completed quite well within like $50, right? It was within $50. It was a smaller move overall. It wasn't a huge move, but it was within $50. So I note that target completed within $50. Noted, period. Right? Noted within $50. Didn't achieve the actual target framework. Like this target would be 34,129. 34,129. Let's go ahead and measure up to what that target would be. That'd be 1.54% to the upside. That's a big trade, right? That's a significant trade as we look at that. Now, having pushed this level of, I can do away with it as long as you guys just remind yourself, and VIP will know the specifics here. Let's go ahead and do this. Let me put this. This is going to be the framework of that descending. It's the essence of the descending wedge. Okay, so to the extent that we have this target outlined, I may throw this in the back real quickly for the VIP. All right, and we're doing good stuff like this all day long. Let me go ahead and screenshot that. Let me get this into the back for VIP without a doubt. Boom. There we go. There you go. And that's going to be a target that we're going to continue to look at. And the tricky thing about the targets, guys, is the further you get away from the target, the more attractive it becomes in my book. Okay, and it's nice to always frame a lower target or a higher target that's been left behind just mentally, so that you can have a complete view of the market. Right? It's important whether or not you're at 69,000 or at 2,000 to be able to think at 69,000 legitimately to think it's 69,000. Okay, so this thing has a target right now at 30,000. It changes everything, guys. Just the ability at 69,000 to say, okay, we have a target at 30,000 right now, right? It's a big deal, guys, to be able to frame things like that. Or if you're at, let's say 2,000, and let me go ahead and take some of these Fibonacci's off. Or if you're at 2,000 and you say, well, we've got a target at 60,000 right now. Completely changes the scope of what you're able to engage in terms of the market. Very important, guys. Very important. Not that you gear your entire trade game that way, or that you deploy all your capital towards that specific target. That's it. You can't go there mentally, right? But the perspective that provides is hugely important, right? The ability to think up and beyond or down and below. Let's see, 8 minutes ago, another 2.1K arrived at 33,110. Still short. Diss the floor caving in. Yeah, that would be me. Diss the floor caving in. I didn't mean to say that. It should have been did. Still short. Good. Interesting. Interesting. We're right at that 65th percentile. In terms of the, let's look at this. Let me gear into, let's go into the, let's look at where we're at on the different, that's the 4 hourly. Okay, let's look at the, let's see where we're at on these. I want to look at my extensions real quickly, just kind of reframe them. All right. And yeah, it's tough to go long in a, some people will just enjoy shorts more than longs, etc. To the extent that you've been short, you've done well. And we may run into that. To the extent that you don't want to babysit your trade, break out of the bear flag. Yeah, it was a nice move for short, essentially. If you would look at that, okay, that channel framework it's been impressive, right? It's been a 10% move to the downside, so about say $4,200 has been eliminated from the price. BTC can do that in a weekend, right? She's very capable of demonstrating some kind of excessive volatility. She's known for it. However, the Nasdaq and the equities seem to be catching up. What a unique environment we're in. And long term, there's some implications to achieving, I won't say parity, but correlation with Nasdaq. I think you guys will agree with that. Just the nature of the charts is very interesting in terms of if you look at the S&P, the Dow, or Nasdaq, you'll just see a continual. You'll see some interruptions in it, but please pay attention to this, guys. The more that we were to structure around, like as Bitcoin wants to correlate to or be treated as which is kind of a new phenomenon, isn't it, guys? But a long-term chart of, let's say, Nasdaq likes to look, maybe it has a few interruptions, right? But likes to look something like this, something along the lines of that. To achieve a correlative with a long-term chart like this is very interesting, with an assumption that it's always going to go up. You guys know that we're currently in the process of being correlated with the Nasdaq or the overall equities markets, right? So to the extent that we're achieving a correlation with, and we're in the process of achieving a correlation with a market that is known with a foundational premise that in the long run it will always go up. It's very important. No one is discussing this, right? With the Nasdaq, with the equities overall, okay? To the extent that we're now achieving a correlative, meaning that our prices are moving at the same time in the same direction, right? Let's say Nasdaq is up or Nasdaq is down. Well, Bitcoin is up or Bitcoin is down at the same time. To the extent that we achieve a parity with a long-term assumed market that has value, increasing value long-term period, that's noteworthy. I don't hear anyone else talking about that. So in terms of that correlative, when you guys make that comparison with Nasdaq or Dow or overall equities or just the tech sector, just frame that. I want you guys to frame that properly. It's important that we recognize that. Currently, we're being paired with something that has this underpinning that it's, well, in the long run, it's always going to go up. Just hold, just define, just in the long run, it's always going to go up. And it's on a different, I'd say it's on a different schedule than what BTC has been on previous year too. Okay, it seems like the Nasdaq, okay, it's always going to go up. That's fine. Just hold on to it. If we have a crash, it'll recover. It just always does. That's the understanding with equities, right? We have a crash. Well, just in the long run, it's always going to go up. it's going to go up, right? It's going to go back up. It's that's the understanding with the equity. So, and to the extent though that we're achieving that parity in terms of, or the correlative, it's interesting that Bitcoin would be falling into a kind of a different. That's a nice reversal in terms of that fan. That's not a bad reversal there. And I just bring that up so you guys can consider that in terms of NASDAQ, etc. Just having achieved overbought just on the 1 minute, not a big time frame there, but the 1 minute. So that's interesting to me. So now is there just going to be an assumption that Bitcoin's always going to go up, right? Is it going to be like the market? You guys know that there have been several experiences or time periods in the stock market where that axiom, that rule has been challenged greatly. 2008, 10 years of returns were eliminated from the stock market. 10 years, right? Big deal. So, Hiroshima can happen at any point in time, but I just find that I find that of interest. I do see a rising wedge here. Let's see the rising wedge feature, and it's a tall one. Let's look at this. It is. It looks like it's walking that top line, that rising wedge. Anytime we have that broadening to the narrowing feature of the price action in here, we're going to have that rising wedge feature. And interesting on this, on the 15-second, it is. I say on the 15-second we have a little bit of a different interpretation. That's nice to see. And I like to see that because it's an overplay in this zone creates, and this is an interesting thing about a rising wedge, creates more of a channel line function to the upside, more of a sustainable feature as we would look at the difference between a rising wedge and a channel. Okay, the rising wedge on the 1 minute still looks like it could have some teeth on the 1 minute. Okay, on the lower time frame as we dig in, have some teeth, meaning be bearish towards or through this line of support. Okay, and on the 15-second, as we would look at this, the framework here is that an overplay through a rising wedge that's sustained to the upside could create an upward channel. I would caution you against such. It's very, very difficult unless you're in the right market conditions to really hammer through and conquer a rising wedge. The fan that we just drew out earlier is a means of beating a rising wedge. Okay, it can leave them in the dust completely, just so that you know. So let's see what we got here. Let's see what we got, and let me get into the chats real quickly. See what we got going on. Yeah, good price action, not bad price action. I bet you guys are screaming some trades through, huh? 100x doing well. I'm positive of that. Good job, guys. Good trading, huh? It's a good market. We like price action. If it can, if Bitcoin can scream to the upside, and produce, equivalent downside moves all day long, and just have real aggressive price action, we're excited about it. Without a doubt, we want that price action. We like that. We like it. It's nice, guys, to be able to book trades. We're in a good market. We got a good group. You guys are good guys. Appreciate that very much. And it was a fun day in the back. So the question that we're going to be left with here is the following. We had a bit of a fan reversal. Nice play to the upside. If you guys are short, Jabal, you're still short, I think. Yeah. You're on this line of support. It's a tricky area. We've kind of double clutched in terms of an original fake out here at this level, secondary fake out at this level. We have that upside target. Jabal, huh? You're going to short with my upside target, huh? Come on, Jubal. You want to short my upside target, huh? I wouldn't blame you at all. I'd be excited about it, yeah, because you're like, oh, we want it to go further down so we get more profit on the way back up. I don't know. Let's see what we got. That's good, though. Short my target. That'd be awesome. Huh? No problem. I have zero problem with shorting a target. Hey, if I could call them early enough, it would be required. Nearly required, wouldn't it? I mean, you think about it, because it would nearly be required, right? Well, you have to get away from it for it to become a target. So, honestly, it's a good conversation. It's nothing bad whatsoever. It's just funny talk. SVIP, what's up? That's good stuff. Another 2.1K arrived. Still short. Yeah, it's a tough market. Stopped out. Oh, you stopped out. Gotcha. No worries, huh? And it's the upside targets, sometimes, guys, they cover, like, you may cover $2,000 in terms of negative price action before, boom, it'll swing back to the upside. And you're left with you're left with some heavy hitting decisions. You guys know this. You're left with they're not you can't you're not you're not they're not light decisions. Some of these, if you really when you really start to trade them, you'll understand. Like you're far away, you still have a target, and it may wind up being an abandoned target, right? It may be much like the lower target of and let's just say at some point, even just the Fibonacci's. I just tell you, and it has a similar feel to it, if you've recognized it or not. But looking on the overall entirety of the market, at some point you build up an anticipation. If we were to look at the Fibonacci retracements, it's a very important discussion we're having here. But on the preceding retracement, right in this zone, 65,000, at some point we had to abandon the 61.8 to the 65th. That 22 to 25, 24.5. We had to abandon it at some point. It's like it's not going to happen, right? And we get psychologically tied to those targets, right? Just in terms of being prepared to operate at them, because we'd pushed below that 50%. I think we did a good job in terms of finding that. I know we did in terms of picking that triangulation. Boom, moved to the upside before we got to that level. But in terms of abandoning those targets in the same framework, I bring up the targets that we do craft ourselves in terms of this upside target here, upside target here. At some point, they become abandoned targets. They just they do. We push towards the completion of them, but and really, this is a great example. And if you guys could listen to this, I would appreciate it, because I think it's a nice example. This similar, let's say, to having a downside target here, things become so aggressively bullish that it is a situation where we're just unplugged the microphones. Pardon me. The situation becomes so bullish that we're completely, guys, that the market just abandons the lower side targets, period. Whether or not they're specific pattern targets, whether or not they're little Fibonacci targets, but they just, they're eliminated in the market. Right, we operated at about the 23.6. People may have been waiting for that 38.2. It's a target. Yeah, we don't hit that. If you could scope in and look at, and a completion target that we focus on is a little bit different than a Fibonacci retracement. I think you guys know that. But at some point you've got to have a threshold. At some point you have to have an understanding, like Jubon. Hey, Sean. What's up, Sean? Just talking about you a little while ago. You have to have some sort of logical framework to work in terms of your like your stop loss, right? Or in terms of the I'd say the level of what would you guys say in terms of the level of is it still reasonable to hit your target? You got to ask that. It's phenomenal when, let me get in here and talk to Sean. It's phenomenal when you can. Let me see what we got. Boom, 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 boom. Sean, boom. There we go. Bam. In the house. What's up, brother? Nice to have you, my man. What's going on? Boom, bam. We're just talking about you, always ready to short. Love it. Great dynamic in the back. It's just exactly what the doctor ordered, brother. It's just like, I said earlier on, where's Sean? Oh, he's in the back. He's shorting. Without a doubt, it's just what you've been doing. So we're just talking about upside targets. We have one here. We probably have a couple. A few have been abandoned. And I'm just putting in the framework of what we say in terms of the psychology required to abandon a target. It's required at times. It just happens. It's no different than when I was saying, like, we have an abandoned target. In the summer of 2021, we wanted to get to the golden pocket. It would have been more value. It would have been nice. We didn't get there. It became a great time to buy Bitcoin in this area. Bam, low 30s, right? Flip the script. We had to. Caught that ascending triangle. Huge price action. I was throwing up bull like nobody's business in the back room. Boom, this has to happen, right? Bull, right? So we abandoned that target. In the same regard, when we develop an upside target, at some point, you're going to have that. You're going to be able to need to flip the switch, right? It's like, well, the golden pocket's not going to get hit, right? Take into context the current framework of the price as she develops. Probably the best way to look at that. Take take note of. Let me see. We got hanging with my wife. Hey, told her I am going to bed now, so here I am. There you go. That's cool, Sean. Nice to. Hey, it's Mother's Day. I'm glad that all of you, I assume, had great Mother's Days, etc., with your families, your wives, etc. Hope those all went great. That's a good day for the family, isn't it? Appreciate the women around. That's nice. We got to appreciate those women. They're important. As we talk about targets to the upside, etc., or to the downside, keeping a technical mindset in terms of, I'd say, what we just talked about in terms of the realistic current status, technical status of the price action. What's going on with the price action? We may have a price target, just for for discussion's sake. We may have a price target like right here, right, in terms of the downside. We have a price target for whatever reason it is right here. Dang it, we're retracing all the way through here. Now, we blast off, boom, to the upside. All right, well, at some point, BTC, as she did, right, really demonstrate just incredible bullish behavior, about an 80+% move from the low to the high here. You guys remember that in 2021. Well, we get into this bull march to the upside. We have to put things into context. Now, you would start to consider it as we were to come back here, but even here we were developing this beautiful bull flag in this region. You guys remember that? It's like, so to the extent that these were just par on par with bull flags. So we, you can keep reminding yourself, well, we have this, and even in let's just call that whatever that would have been, we just call it a Fibonacci, right? That golden pocket here, we have that target below the golden pocket. Well, looking at the framework, let's take a look at the bull flag here. Okay, this bull flag in this zone, right? And you guys will recall, we have the golden pocket here, right? We have that golden pocket. Looking at the repeat of the bull flag, though, is reasonable to continue to, I'm going to still push for this golden pocket. Not so much, guys. It becomes unreasonable given the current status of the price action, given the current technicals, the evolving and I'd say developing technicals and really comparative technicals preceding bull flag repeated in this zone. You guys remember that we called out, this drop in here, saying just be aware of the drop in this zone preceding, making that comparative, right? So you have to let the technicals continue to evolve, and as they do, getting into certain circumstances, like the current circumstance would be obviously, well, we seem to be completing quite well the bear flag. Period. That would be the the 800-pound gorilla in the room, right? It just would be. We seem to be doing awful well at this bear flag, right? Well, I'm not gonna disagree with you. Are we going to abandon the 50% retracement? Are we going to abandon it? It's where are we at right now in terms of that 34? What's that, 34.5, right? Let's see, 34.496. There we go. That must be it. Right now, we're $764 off of the 50% retracement. So, at some point, it's going to be a technical consideration. It's going to be a technical, a technical decision. It should always be a technical decision, never an emotional decision. And we're just going to need to consider the technicals and continue to put in the framework of, this is, it's a gunner. Some of you may have already traded the 50% so many times that you're not real keen on trading it right now. I like to dig into lower time frames. I like to book trades. That's what I like to do. So in terms of those overall levels of retracement, we know we have the golden pocket below us, and I'm also not yet, because yes, we had a target that did not compute to the upside, $50 there. So to the extent that we would like to prefer downside targets to upside targets, right, we can discuss that. That may be another approach in the back. And I just don't want to back off of our targets with the understanding that it becomes I mean, that's the surprise of the game. That's that top 1% that can formulate an upside target and even contemplate it, right? Even really contemplate it and view it as a target, much less really trade it. That's the top 1%, guys, of the market. And I want to remain in focus like that. And if a few get away from us, perfect, no problem. I'm ready for that. That's the market. It's going to present risk to us as individually, as a group, etc. It's just going to happen. And to the extent that we have the ability to consistently frame upside targets like this here, I want to continue to do it. We're going to continue to do it. It's a 1.21% move to the upside. And to the extent that the framework, I'll say this, that to the extent that the more remote targets just become abandoned as a matter of the process, and that I'd say one of the features that may assist in this discussion, and I'll close it out here with this discussion at least, is that those features which are more heavily indicated on a larger time frame remain targets. Okay? The features which remain, okay, on the larger demonstrated time frames remain targets. All right? Now, for that to be demonstrated, I would go back to the daily time frame, and I would go back into this falling wedge here in terms of a potential recoup into the falling wedge. Boom. Okay, that's beautiful. Now, that's a big, large time frame, daily time frame, right? To the extent that you trade wedges a lot, and VIP know right now. If you guys aren't VIP, I want to welcome you guys. I appreciate having you guys, and we would love to have you in VIP. It's bottom line. Without a doubt, we'd love to have you in VIP, guys. In terms of this level of support resistance, there's a theoretical framework wherein we would want to recoup either the essentially at least that apex level of any descending wedge, right? So that's on the daily time frame. So to the extent that that's still indicated on the daily chart, it's front and center, right? So that changes the framework because it's on the daily chart. We're not looking at the 5-minute chart at a small, let's say a small, there's a difference here, guys. At a small, very small, let's say, descending triangle at this very top region here. We have a small, or a descending wedge, pardon. Right at the very top level, we have a descending wedge. And this is going to be a completion target, on the 5-minute. No, guys. That may have been abandoned. Maybe it did not get reached. We started to rely on the larger time frame. We started to develop more of a macro approach. These smaller day trade targets may disappear. All right? They may disappear. There may be a failure to achieve the target. It's going to be nothing that you do. It's going to be nothing that I do. Okay, right or wrong. The pattern played or didn't play, guys. It's the market. It has zero to do with what I did wrong, what you did wrong. You traded it didn't go right. It's just you're going to abandon some of your targets on whether or not they're Fibonacci's, whether or not they're entry targets like on a Fibonacci or on an extension to the upside, right? It's just a process of the market. Understand that, please. And it's nothing you did wrong. It's nothing that I read the Fibonacci retracement. We're not going to read a Fibonacci retracement or extension level incorrectly. We're not going to develop a wrong upside target in terms of a Fibonacci, or a descending wedge. We're not going to. I'm just going to tell you, we're very unlikely, guys, to mismeasure a bull target to the upside. Maybe within like 50 or $100, quick draw. We're the technicals are the technical. They're going to be the technicals, and to the extent that they accommodate technical traders, then beautiful. And quality day traders, beautiful. To the extent that they don't, and they just completely go erratic, okay, that's no one's fault, period. I'm having that discussion because first we have lower time frame, right? A lower time frame, right? Maybe the 5-minute or the 1-minute. Don't hold on to like, man, we have a 1-minute time frame upside target right here for completion. I'm paying attention to maybe it's on the 15-second, right? Man, at some point you're going to let that 15-second target go. That was a day trade target. It didn't play out, okay? If for whatever reason. It's like, I have read, I have studied, and I understand. You may get here. Each and every each and every ascending triangle, if this were one, right? There's a lot of argument there, but you say every ascending triangle the market must recomplete to that top line resistance. Okay, if you went there, first of all, which that's not a rule of ours, it's not something we see in the market, but if that were the issue, if this is on like the 5 second, man, you can't hold on to that, as you start to dig down into the price action. It becomes more of a macro ball game. It just does. Okay. Now the one completion issue that I'm going to continue. Let's look on this daily real quickly. To the extent that we have a confirmation on the flag on the daily. Okay, back to prior support as resistance. Boom. Looks like we got that on the daily. The different time frames though are a little bit difficult on this issue. Was it the hourly that we don't have the specific clear confirmation on? Yeah, we don't have a clear confirmation. I know it's hard to fit this on the screen. Let me zoom out all the way. This is the biggest question right now in the market for me. Just for me. It's the biggest, I'd say, target that has been abandoned in the market. You want to know about a target that's been abandoned? Right here. And this is technical. This is a technical fact. Boom. Right there. Okay? We have a level of support on a bear flag that just got abandoned without a confirmation. It took all the time in the world to carve in, and on the other time frames, etc. Okay, abandon nothing really. It carved in. These are all on different time frames. All this action, these are all confirmation on different time frames. But on the hourly, it's clean. Boom. That's important because typically we would like to see a level of confirmation. Let's go to the 4 hourly. We need to address all these time frames as well. Let's go to the 4 hourly. 4 hourly is hold on. Let me get into the 4 hourly. 4 hourly is similar. So 1 hour and 4 hourly are the same. Is it the daily? Yeah, the daily. This is where the crux comes in. So 1 hour. The lower time frames have no confirmation. The daily has a really nice level of interaction, confirmation, prior support to resistance. Boom. So that's not necessarily what we would expect. You guys know that? We might normally expect, guys, for the larger time frame to not necessarily have the confirmation, and the lower time frames to be the ones with the etched in price action, right? Because there's more volatility expressed at the lower time frames. Right? So it's odd that we have the daily boom expressed. We may not be able to rely on the hourly chart. We just may not be able to rely upon it. Very interesting. So we can rely upon the daily, but getting into let's look at this on the hourly there. Just not having that confirmation on the hourly or 4 hourly is a different ball game, guys. It's a different. We would expect the lower time frames to have that because there's so much more expressed volatility. There's so much more price action that's expressed. So again, this would be technically on the lower time frames. This would be however, on the daily it's satisfied. Very odd. To the extent we could talk about this. To the extent that this represented a fallout, and this was the war, Ukrainian-Russian war. To the extent that that played a figure or a part in the price action, and that's being kind of forgiven or forgotten by the market on the lower time frame here. That's an interesting point. I'm willing to consider that. I think that's a valid point of consideration. So to the extent that that has invalidated, and that's an interesting point, guys. To the extent that that has somehow, although that's not really technical, guys. But to the extent that that has somehow invalidated this area in here, I would be willing to discuss it. I'd like to hear opinions on it, but it's not something that's it's just not something that's solidly. We don't do that. We're not going to forgive a week of price action because there was I don't know, guys, a big fire on the way to the office or something. There's traffic, whatever it may be. The market's tried, tested, and true in terms of its its participation in around wars, events such as that. We don't normally make exceptions technically for those reasons. So I'm going to still call that as an abandoned. We haven't been focused on it, but it is interesting that there's no confirmation on the lower time frames. Odd again that we have. That's been the biggest issue from the 4-hourly, 1-hourly to the daily on that bear flag. It's just it has been the overall bigger issue. We still have the framework of the upside. Let's look at this. The upside. Let's look at this in terms of this wedge feature, falling wedge. Boom. Okay, we still have that as a technical upside target. Okay, just again, frame yourself around upside and downside targets. It's important. Yeah, you got your Fibonacci's below. Now, what begins to dictate this discussion very easily are the lower time frames, right? You guys know that. Those lower time frames are huge. In terms of being at or around the 50%, we're at a Fibonacci pickup still. We're within threshold for a pickup. We do have, again, it's at some point when your screen turns green, you have a decision to make. That's the bottom line. You always will. When you're in the money, you have a decision to make. The guys who press and push and never let go, those are the guys that have problems in the market. That's the bottom line. If you're in the money, if you're in the money, I don't care if it's 40% or if it's 4%, right? If you cover your exchange costs, etc., then yeah. What do we got here? You're following Nasdaq. And what do we have here? Anastasia Castro. Hey, welcome. Appreciate that. I'd like to just have that on. You're welcome to join our VIP trade group. We have a really great group, Anastasia. We would welcome you to either continue to be a subscriber or to join our VIP group. We have back rooms with all types of trade details, signals, etc. Cool group. And let's see. U.S. futures down further. Asian markets down big. All right. Asian markets down big, saying in the back VIP. Let me see. That's so funny, Sean, what you just said in terms of going to bed and you're here. That's great. You had shorts open at 38.8 area, but I really thought there was going to be a weekend pump, so I closed. Big mistake. I remember that. I was glad that you said, Sean. Honestly, I was glad that you took the opinion that you thought there was going to be a weekend pump. I thought that was awesome. Just so that you know, it's like even if it's wrong, just take the opinion, go with it. Just have that forthrightness of whatever you believe is going to happen in the market. You tell us what you think is going to happen in the market. Never worry about, well, people might trade on it, might do this and that. I was excited to hear that. Yeah, BTC trades like a tech stock, Sean. Following NASDAQ today, 180 days since BTC all-time high. 6-month downtrend. Yay, huh? We're going to get beat up this year, huh? That's fine. You put us back in the ring tomorrow. It ain't going to – we don't quit, guys. But look at shorts. You love to short, so this is your dream. This is good for you. Since – not seeing. There we go. I heard you called the bottom last summer. I haven't heard you call it yet. No, and we just picked up on the ascending triangle. It was a nice move in the back, and it just got up and out quickly. It was a beautiful, beautiful pattern. That thing had bottom written all over it. It was just bam. It was some nice aggressive price action. And yeah, that was a big move. Big pattern to catch. So we're just in this kind of lazy fold over. Now, as we discuss this, remember when I talk about one thing importantly, when we talk about the fact that a fan can beat this is highly crucial information here, guys. Pay attention. That a fan can beat a rising wedge. That's essentially what we're looking at right now. That's attempting to occur to the downside. Okay, we have this fan structure, and we're attempting slowly but surely to boom, to have this move to the downside. It would be, but just understand when I tell you that a fan can beat an ascending triangle or an ascending wedge. I say that frequently, right? If we have an ascending wedge, right? Typically bearish. I'll tell you that a fan, right? This fan framework, all of these levels of support, or we'll say resistance to support, but support confirming on prior lines of resistance. Either way you can say it. In classical feature, make sure you get Murphy's book, okay? In terms of the New York Institute of Finance, it'll explain what a fan is if you don't know what it is. Technical analysis of the financial markets. So typically a bearish structure, we would expect to pour down here. Just to discuss this in context, I'll get back to the regular chart. This is inverted. But yes, these can traject to the upside here without a doubt. They can, based upon the continual ability. Now, if I flip this the regular way, the continual ability of, excuse me, of the traders to fail to hold support. Boom. And we need this key focal area here, the seat. I'm going to call this the seat of the fan. Okay? This area right in here. Boom. That's the seat of the fan. Okay? And in terms of the price action, it becomes very self-explanatory when you guys read about it in that New York Institute of Finance book. Sean, I know you looked at it. You start to see what is involved, right? We have pushed along this bottom level. It's become a little, I'd say, a little bit uncomfortable, and it looks like we're formulating a secondary pattern because we have faked out one time in this zone on the. Let's say this is the 5-minute chart, guys. The 30-minute has a good look at it as well. The 30-minute just shows you and demonstrates that we really did. The 30-minute really did pick back up and fake out. You guys know that from the YouTube video earlier today. However, depending upon when people see the YouTube video, I guess by today, anyone who watched that YouTube video will say, yeah, that's what we did, right? But it wasn't technically accurate, this line of prior support, hit of support here. Really, we should have capitulated here instead of this zone here. I think you guys will agree. It's not mandatory or required, but the fact that we have faked out in that level, gone below, and the buyers did pick up, just briefly, guys, okay, that fact is noted herein. I'm just going to say hereby, and I'm just, I'm very technically, we're very technically oriented here, guys. So we pay attention to a fake out, without a doubt. We just do. Yeah, you need to reread the fan chapter a few more times. Good. That's important. Bam. Without a doubt. Got to get that done. So we have an upside target right now. Is it a all systems go upside target 100%? I'm going to tell you this, guys. It's a target from the 4-hourly. I like it from the 4-hourly, but we don't want to. I'm going to tell you this. Anytime that you enter, if the one, let's see, should the fan compromise it at all? We have an inconsistency technically as of today, as of the. And this would be the question as to when would we classify this or consider this to be a red condition? Okay, because we have to look at that, guys. The YouTube video earlier today, we were looking at pouring down out of the fan. We faked out. We didn't pour it down out of it. We recovered, right? So to the extent that we have had an expression of a technical, okay, that is, let's say just a beyond the expectations, let's say non-technical, it's a fake out, guys, but let's say a non-technical expression, something that could have cost you money, right? It just could have, period. The technical expression here, the framework was so solidly put forth on 30-minute, you had multiple levels of conformance. 1, 2, 3, 4, 5, 6 levels of conformance here to have trajected down and out and recovered. That was outside the norm. To the extent that I would just abandon this, I'm going to continue to have, I'll say this, I'm going to continue to have my upside targets with the understanding that the further we deviate from this 50% retracement, that your shorts are going to be the side that are going to pay the best. You guys know that. They're going to be the most consistent as we continue the trajectory down. And people will want to know, well, does that mean we're going down? Are we going up or are we going down? Sean, you just said Asian markets are down, right? Okay, that's a factor or consideration. I'd say, are we at a line of support or are we at a line of resistance? That's the way I would answer that. I would start at a technical discussion. Are we going up or are we going down? Are we at a line of support or are we at a line of resistance? If we're at a line of support, we're going to be going up, unless we fail the line of support. Are we going to be going down? Are we at a line of resistance? If we are, we're going down unless we break through the line of resistance. So it's not as easy. It's almost as easy, guys. Are we going up or are we going down? The real question is, are we at a line of support or resistance? It just takes one further step, and then knowing what's required or how we can go about breaking through a line of resistance or breaking through a line of support. You have to understand the market mechanisms behind and the demand function behind in terms of a purchase of a product, a lack thereof, that being enough to hold a line of support or not, or break through a line of resistance or not. And the pattern dynamics, the technical dynamics that are put into play to demonstrate the likelihood thereof on either the support or resistance end. Whether or not that support be identified as a Fibonacci retracement or whether or not the resistance be identified as an extension. I think you guys agree with that, right? We're not going to be the group that's, are we going up or down? That's not us. It's, are we at a level of support or resistance? We're a lot more micro on the patterning. We'll dig into, and all day long we are, guys, you know. Literally, we're trading all throughout this level. You're not going to catch us just not many 15-day traders, right? Some in the group, and that's fine. There's no problem with that. But as we would look at it, we like to the group likes to book trades, right? I like, and I will reinforce for the rest of the year, your ability to sit down at a time and place of your choosing and book a trade. While some traders will spend or already have spent, guys, from the breakout point of the, look at these guys, from the breakout point of the, and really is this close, guys. Look at this. From the breakout point of the bear flag, 3 days in 12 hours is 11.71%. All right? 11.71%. Now, in terms of that, you can create 11.71% in 5 minutes. And to the extent that you're capable of doing that, that's my preference to see you guys be able to do. Not hold on to and watch a phone or watch a price chart every 5 seconds for the last 3 days and 12 hours. There's something to be said for carrying the 3-day and 12-hour trade here. There's something to be said for it. But at the same time, we like the trades in the back. We are day traders. I'll tell you guys that. We are day traders. And to the extent that we like smaller moves, right? Sean, what did you have? A 90% trade? 90% short during this, in like, what was it, a few hours or something? One 90% trade short. Boom. The video that I did earlier, the YouTube video earlier today, was 199% short. So the 11% is nice. It's nice. It's something that, you know, if you choose to go break down on the bear flag, you know, it could be a phenomenal overall short. I'm just not, I got to tell you guys, I don't like staying in trades for 3 days, 4 days, 5 days, and it just being my life. I like to have a bit of time away from the screens. That's just me. Nikkei index off 2. HSI almost 4. That's good. Those futures looking pretty bleak on NASDAQ, I would imagine. Yep, so this is the last, I'd say, guys, in terms of the primary function. We've been, and I haven't been overly bearish on this into the entirety of this pattern because we've been going down to the 50%. I'll just say that. If the 50% does not hold, then it does not hold. But I'm not going to turn and run for cover because a bunch of bears have a flag on the screen. We'll trade. That's fine. I'll trade with you. We'll hit some shorts. It's not a problem. But we're just geared towards we got to be men. I got to tell you guys, we don't. And I say that doesn't matter if we can make some cash, and we have, guys. You've done well, and it's nice to see you guys in the framework of shorts. But yeah, if I personally can sit down at a computer with a skill set and outdo people who are operating on like 5 or 8%, leverage, you know, comfortably they're at 5 or 8% on their leverage. All right, like let me hit one trade at like 80 or 90% leverage or 125x or something like that. I'd rather do it in like 5 minutes, man. Let them go take the 3, 4, 5 day, jaunt into the technicals and being wrapped around it. I'd rather just do it really quickly, and I'd rather have the residual of that. And it gets back to the argument that someone will say, yeah, but you could have traded the entirety of this at the higher leverage, and even at the higher leverage have had it. Like, you're not understanding, you're not listening. I don't want to spend that much time in the trade and have it take that much time from me. I don't want it to do that to me. I want to beat this market, okay, at a time and place of my choosing. I want to maximize my interaction with the market. That's just it. That's just it. I don't want to have to, wonder about it when I go to sleep, and I wonder about it if I'm going to wake up and be the victim or the conqueror, right? I don't want to look what happened, or that's just not it's not in the cards. If I were entering into trades, maybe passing them off to somebody else or an overseas office or something like that, maybe so. But if I'm managing my own trades, and I mean that, guys, if I were entering into trades, in terms of a short at this level or at a different level, if my role were somehow, or you guys can understand this too. Okay, great, I'll enter a short here. Boom, that's it. I'll pass that off to somebody else to worry about. Yeah, but if I have to manage my trades, I also like staying a little bit bullishly minded towards levels of support, entry, etc. But yeah, if someone else is going to manage my trade for me, great. Take that 3-day, 24 hour a day, 7-day a week, 365 days a year. You take that with you. I'll hit the button here. You take the rest with you. You do that. And I've had circumstances like that, and it's not easy for the guys who are on that 24/7, 365 stint. It is not easy for them, guys, at all. So the reversal feature here, having some problems. If you traded that fan reversal, congratulations. We do have the upside target. Let's see. Sean's saying that the overseas markets are just turning. They're bleeding, right? And let's dig into some Fibonacci's and see where we're at. But you guys know you can sit down with 125x. You can hammer the markets. It's the preferred way to trade. It just is. And that I'd say the minimum exposure in terms of your time is important. So looking at the 50% right now, golden pocket underneath, we had that, remember that very interesting, what was that, golden pocket within the golden pocket within the golden pocket, and boom, down she went, right? Very interesting. Very, very interesting. So what would we say? Like today, in terms of the price action, I made the video in terms of the fallout from that fan. Boom, essentially the move down that we've made in a delayed fashion here. So you would think that I would just be all excited about the price going down. It's just not really me, guys. I mean, I'll alert on some pattern formations. I'm just typically not one to talk price down. Just so you know, that's just not me. And I'll bring caution to it, but. It is what it is. I like, and especially while we're going down, I assume you guys also know about it. I think this is fair as well. I assume you guys know about your downside targets. Looking at that framework, you know better your downside targets, your basic Fibonacci retracements, etc. Right? As well as any cross trend lines of support entry that we can formulate. And one of the more difficult things to think of is is any type of a target to the upside. For the life of me, guys, this level of support to no confirmation on the hourly or 4 hourly. Very interesting. Very interesting. Let me have a sip of water real quickly. And Sean saying, you've never looked at such small time frames until joining VIP. Yeah, and look at what you can do with them. And you understand as the target potentially becomes more remote, and it's still on the map. Like this confirmation on the hourly and the 4 hourly, we can't have a better example than this, guys. The hourly and the 4 hourly, if you were to look at this, it's like we would expect a confirmation. Now we got it on the daily, very odd circumstance, guys. It's the market. That's the element of risk. So to the extent that we could it seems unheard of, right? Because the whole market is like everyone is running, but that'd be, can you imagine 12.73% move to the upside? That'd be sweet, huh? That's a nice move, huh? I like thinking against the grain at times, just seeing where we can get to it with it. And the bear flag is the bear flag. We know this. And the candle wicks kill it. You guys know the candle wicks, unfortunately, the candle wicks absolutely kill it. That top line resistance here, you know, and I'm maybe more of the type, and you guys know this, VIP, you know. Let's look at this level, the parallel channel from here. Oh, man, that parallel channel. Like, I did not want to step in then and say we're at a level of resistance. Nobody wants to hear that crud, right? They just don't want to hear it. Recently here, before this thing down, boom, are we at a clear take? No one likes to hear it. They just don't. People want the price to go up. So we have some upside price targets there. All right? Mentally, I think it's good for everybody. Even if it doesn't get there. Oh, it didn't get there. Oh, it didn't get there. Right? Just we need some upside price targets. Because no one liked to sell here. Torque. Shout out to Torque. I know he did. No torque. Boom. He sold there. Like I know some other guys, bam. Recently here, this one, boom. Just, but if you guys are into shorting, like, Sean, you're saying you've never looked at small time frames like this. It's true. It's cool. It's all right. We're going to get there. And, I'm still a little intrigued by this, the entirety, technically speaking, by the framework of this. It is what it is, right? It is the, let's do that. It just is what it is, right? And it is a, not to go unresolved here, right? This would have been a nice framework to put things into. As we still look at operating along this potential 50% retracement, would be very nice to hold this for the possibility of a descending triangle, right? I think we all agree. Descending line of resistance, yeah. And, on the candle wicks, you're very close in terms of this bottom level of support. So we're still contemplating a technical conformance within something that could be kind of interesting. Now, the degree of time that this would take is astronomical, right? Years. That would literally be a year's type of event, okay, in terms of completing that. Not necessarily towards the apex would it need to be completed, but it is potentially indicated. Descending line of resistance, right? Flat bottom of support. So if we pick up in this area, that's what we're going to be looking at, just to project into things here. This is a long, drawn-out pattern, guys, and it could break down at any point in time. So to the extent that we're heading down irrespectively, it's a bearish pattern. To the extent that we're heading down irrespectively, it may be preferable just to go ahead and get on down. What do you guys think? We can spend some time hanging out, doing some different things. The benefit, again, and this needs to be discussed, reinforced, and we need to appreciate it in this group. The benefit, again, of lower prices. Let's take this specific amplitude of the bull flag here. Bam, move to the upside. And we've gone through this quite a few times. Just wrap your mind around it, because as we're achieving lower prices, this is the benefit. This same amplitude move. Let's just call it in this zone. And we'd have to draw up through this level here. There we go. The same amplitude move. Hey, come here. Sorry about the technicals. There we go. The same amplitude move from this structured level here to this structured level here. Now, what is the percentage? The same. How many thousands of dollars were covered here? $22,550. $22,000, guys. That's a nice move. Now, it's going to be $22,000 if I put it here or if I put it here. But what's the difference if I put $22,000 around up to the $75,000, or if I put $22,000 and it goes from, let's say it goes from $15,000 to $30,000, $30 some odd thousand dollars, $35 some odd $1,000. What's the difference? It's still $22,500. But the difference is, while we look at this, the difference is going to be, well, that's 42%. 42% is okay, but 153% is much better. And the fact that BTC has a habit and a preference thus far exhibited in terms of its demonstrated, let's look at this, it's demonstrated, let's say this bull flag right here, all right? Let's say 22,500, bam, right here. What do we got here? 22,500. What do we have here? 22,500. What do we have here? 22,500. Okay? So there is something I called a derivative gain, G-A-I-N. What are we going to extrapolate from the preceding moves of Bitcoin to try and build into additional moves here, right? Higher percentage, 150% versus 40%? We'll take the 150. So day traders, as we would experience the same types of moves at higher or lower ground, you know, we'll take the lower ground. Just bottom line, we will. So, but I understand a lot of you have holdings. A lot of you have. There's another side to that. There's another side to that equation. All right, but I understand both sides of that equation. I'm prepared to operate at lower levels with that advantage. The same $22,000 could be 150% instead of 40%, right? So we're plugged into that notion from here to here on the 5 minute. I'm looking at the advantage as we're going down. I'm happy about it. No problem. And be selective in your trades. Look at when you're operating on high leverage, especially guys, and you guys are capable of doing it, just understand that if you want to outdo the guys that are going on 5 and 10x or 3 and 5x, just be very selective, right? Be very selective. Go on that high probability framework. And to the extent that we're heading out of a bear flag into the 50% retracement, it's a difficult time, guys. If you want to know on the 50%, should you expect a bounce or not? I mean, we've already hit it 1, 2, 3 times, multiple times. So to the extent that it's kind of we're in a bit of a flux, we will agree to that. We're in a bit of a flux. Seeing this wedge formation. We're seeing this wedge formation. We don't want to capitulate beyond this level of support. You guys know this. We're working in, just to kind of recenter here, as we would work into, yes, the fan framework. And I'd say we got that break down. Look like we fake out, but it's just an odd framework for things to go into. Let's go into the Fibonacci real quickly, the Fib wedge. I hope you guys had an awesome weekend. I hope it was good. Oh, dudes, I didn't tell you guys what happened. I didn't tell you at all. Last night, I went outside, just bam, 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 bam. Someone ran down the street. They were intoxicated, ran down the street at like 60 miles an hour and took out like cars all down the street. Up into homes, up into driveway pushes, up into all different types of things. Bad deal. 60 miles an hour on the street at 4 a.m. Good morning. I was like, what the heck? You know, it's nice to talk to my neighbors. But, you know, it was like, it was not, but the authorities that came out were very polite and kind and appreciated that very much. Just bad deal. Glad that no one was hurt, to be honest. So looking at the framework here of this, I had to tell you guys, because I forgot to tell you that. It was a pretty wild deal. Took some pictures of the dude. I'm like, you know, you're going to pull this off on my street. We're going to take pictures of you. He like glared at me. I'm like, yeah, you know, I got your picture, man. Just, anyway, looking at the framework here, the Fibonacci retracement, the Fib wedge, okay, goes and is different than the Fibonacci retracement, but it has the same levels on it. You'll see the 50%, the 38.2. You'll see the 23.6 right here. Boom. Okay. See the 7.86. We don't add in the 8.6. Let's do it. Let's add in the 0.86. How about that? 0.86. There we go. And now we have 0.86. There we go. Now we have that 86. Cool. So this is a non-desirable area to be in technically for any descending wedge. We're in the red zone. See, it adds some context, doesn't it? That's a good thing. When we push into the red zone, this is an accompanying technical factor that I would look at typically and say, I'd be more willing to abandon an upside target because we're in the red zone, right? I think we'll all agree. We're in the red zone. We don't like to be in the red zone, guys. We just don't like to be in the red zone. So I would be more willing, based on probabilities alone, to abandon an upside target. Is there a complication that we're sitting around the 50% retracement? Yes, there is. But typically, the red zone on a falling wedge, very unattractive. I just might sit this one out. Yeah. But we don't like to sit ones out, right? We like to trade, right? Is the 50% on BTC over and gone? Is the upside target here over and gone? Got to tell you, additional 1.21%. Trade that on 100x. Huh? Beat all the other cats in the market. Huh? Want to sit there and chime and dime around a 3x or a 5x. Beat them all. Hit one trade. Boom. That's the way to do it, guys. If you can. If you can. If you can't, work on it. I'm excited about that. In 2022, I believe you guys can. I know you can many times already. And there's some competitive traders I've run across on high leverage beforehand. Quite a few. So, it's not required. Huh? Just schedule in if you want to do spot, as is the name of the game, right? Just slowly scheduling in on that spot. Long-term accumulation pattern. Nothing wrong with that at all. This fan formation holding this level is gripping further really along this, I guess this falling wedge that we have, gripping further along this level of support, pushing, continuing to push. Very strange, huh? It's like you can feel the upward momentum a bit of, or the pull of the orders in this area. Quite a few levels have been broken through. Quite a few of those floor order levels on BTC have been broken through. And Jubal was talking about that earlier. Seeing the orders on the map just boom, broken, right? It's rough stuff, guys. Just large orders, large levels of orders where people are stacked, just boom, having the floor taken out from underneath them, right? So we have an upside target. We'll play to upside target in terms of that. We won't abandon it. The more remote that the targets become, i.e., and I just want to have this specific discussion today because it's very relevant, right? For instance, on the 4-hourly or the hourly, that lack of a confirmation in this zone, boom, we would have expected it. Right? We also would have expected this specific falling wedge to react to the upside. It didn't, right? And we caught that. At least we caught this major move here in terms of that cross trend line. Support to resistance. Boom. That's cool. That's VIP. Now, in terms of the recapture of this peak, it's still a target. The more remote that it becomes, and it's a target within the measurable and level intolerance of risk that you have, right? It just is. Some people would not play that at all. We've broken out of a bull flag or a bear flag, pardon, and they're not playing any upside target. Everything is down, down, down. Yeah, it's just that's a little complicated because we're at the 50% retracement. So understand that we have a few contradictions. If you're looking for a complete level of confirmation on the entirety, we literally don't have even a price line confirmation on the hourly or the 4-hourly. Fact. On the daily, we do. I like the daily chart. You guys know I reference that a lot. It's just odd not to have it at the 4-hourly or the hourly. And what I'll say is, in terms of confirmation, you have some confliction in the market. If you choose, due to the confliction and the higher level of risk implied by such, the contradictions in the market, if you choose to stay out of the trade, okay, that's fine. If you choose not to trade, you don't want to be in at the 50%. I'll let you know. Yeah, you don't have to trade, guys. It is just a target. I'd like to see you guys at least try to hit those targets. It's important for me. The fan formation a little bit, I don't know, guys. Yesterday, slam into it, hit it. You know what happened? We got a downward fan. I'm going to operate with the technicals. We had no reason to be shy of the 50. Now we got a downward fan. I mean, I had to tell you guys that. I had to cut the video. I'm like, good gosh. And I did tell you guys, for the record, I sent that to you last night as she was developing, right? Like, well, London's singing a different tune today. Well, I got to tell you, I sent that fan formation to you guys last night after the stream, and I'm like, it's a reversal pattern to the downside, you know? And before we even really started to go up, it's just continuing to want to pour to the downside. So I got to have a talk with you today about whether or not we just abandon the upside targets. I don't want to abandon anything, guys, in terms of an upside target, but within the framework here, let's say this about the 50, given the fan, which I did bring to you. Angel, I texted that to you as well. Just to make sure, guys, because I'm like, we got to hammer this, hit it. I'm like, well, hold on. We got a little bit of a fan issue. Right now on the 50 is still in play, period. 50 is still in play. Stop loss, beautiful idea. To the extent that we have an opportunity to short, right? I'm going to be looking at maybe a significant short this week in terms of my capital exposure, etc. Right? I'm not going to short at the 50% retracement. I'm just not. It just could get messy, guys. In terms of a heavy play for I'll remember that one all year long. Probably not the right way. Like, man, I got a golden pocket. I'm going to short on the golden pocket. Do what? You literally look at the guy like, dude, what are you doing? You got a golden pocket hit and you're going to short at it? Whoa, that's going to be your trade for the year? Whoa. And come on, guys. So it at least needs to sound like we know what we're doing, right? Copy that. Ooh, you got the golden pocket, you're going to short at it. Wow. Come on. So to the extent that I'm just, I'm gonna fly to the moon, pay for my ticket by shorting at the 50% retracement. Well, maybe not. A little complicated with the fan action, so it takes some understanding, and it's not. We're not having any discussion that no one here can appreciate. So you guys are cool like that. A little bit of an upside price action in terms of that target to the upside. I would like to see this baby cruise, at least to that target. At least, you give me back a point here, 1.12%. That's not asking too much, right? Great point, Jabal. Yeah, it's just we would go down in history for that, huh? Oh, that group, huh? Who decided to short the golden pocket? Ooh. It's like what happened to those guys? Well, we don't know, man. It's just good stuff, huh? So we'll figure it out, guys. In terms of the pattern identification, the way the patterns will continue to manifest themselves, etc. Just ideally, right? Ideally, we're looking at if we really looked at this well here. You guys see what we're dealing with here. We have a rising wedge, and then we have a more aggressive rising wedge. Like, go look at the ape chart, period. Now, BTC is not ape in reverse in terms of bullish to the bearish connotations there. Go look at the ape chart again tonight, period. Please, you go do it. Guys, look at the ape chart with the rising wedge that ape had underneath, and then the more aggressive rising wedge here. And what did it do? It slam dunked back down here, big time. You guys know that. It completely throttled through here. I did that special stream on shorting, and then bam. That was one of the biggest collapses this year. You guys know that. One of the biggest collapses. Glad we did the shorting episode on that. That's cool. So in terms of the framework, though, it is exactly, nearly exactly that. It feels like almost exactly what we're looking at. We have this double wedge formation. We've been trading these. You guys know this. So it's like, well, we're going to ask this. Do we have to come back here? Like, does this have to happen? Now, the one thing that we have is this monster complication on the 4 hourly and the other time frames. We have this underlying monster technical. This is good stuff, huh? Yeah, we have this underlying monster technical feature here to really put into context. So does it have to come back through here? Technically, with the monster complication, no. It's just when you see this without that context, it's like the vast majority of the time, bam, this is going to come back at least into this zone here, if not into this region. It just is the majority of the time. Whether or not you're flipped or not, whether or not you're inverted or not, guys, on the ascending or the descending framework, look at that ape chart. That thing came roaring back through a pattern like that. So on the regular chart, we have in the macro matters. This overall pattern, the bear flag matters, right? It just does. So What I'll tell you is this. I gave you the update last night, right, with the fan formation. So you guys got the goods on that, at least the perspective, right? Very important. And I'll do the same tonight. And we'll be in the back and we'll chill. Just wanted to have a little bit of a, kind of hangout, VIP session on Sunday. What's up? What's up? You guys are cool. Good group. And we will continue to hammer it out in the back. Just nice. Oh, look at this, guys. This looks nice. I mean, what a technical. If we were to design something technically, and that's nice, guys. That's a nice pattern framework. That doesn't look bad at all. With the understanding that we would expect, boom, to go through here. However, however, we've got this flag formation. It's like, well, we could really get up and out of here, right? It's just, this is why I don't like, me personally, I don't like trading a bearish breakout of a bullish pattern or a bullish breakout of a bearish pattern. I'm not the only one. I'm not the only one. To the extent that people are just deciding to sit out, could you just sit out on like one of the biggest moves that we've built up for 3 months? Yeah, you could, without a doubt. You have a bullish feature breakout of a bearish pattern. Some people won't trade them, or at least won't trade them largely. Like if they, there's a lot of contraindications on the 50%. This is a challenging equation. You guys know that. We have the advantage of of at least the perspective of the fan, right? That we're currently looking at and a bit of an upside target. So to the extent that you guys were a little bit warned, this was today's price action, wasn't it? From that preceding video. Let's see here. Yeah, 10 hours, 12 hours, right? That was yesterday's price action. Down into this zone, then further down. To the extent that you had this line last night, that was an important line to have in terms of the operation of the entirety of that fan. So I'm going to go chill for a bit. I'll be in the back. You guys rock and roll. We will have a great week trading. Bottom line, be selective on your trades. You guys know that. And watch those floors. They like to fall through on those orders. We're noting that. No problem. Glad to have the info and the intel on it. That's good information. And shout out to Angel, #1 contributor on top, $7.79 in Bitcoin. Angel, brother, love you. Hope everything's going great with the family. And tell mom hello. Big hug from London. And you guys.